Hi everyone, my name's Kumbi Tinoye and I'm the CEO and founder of Urban Geeks, an African-American Latinx multicultural news platform focused on technology, business, science and entrepreneurship. I'm so excited to be moderating this discussion on IPOs, or initial public offerings. Our speaker today is Barrett Daniels, an IPO guru who recently worked as an operating officer focused on IP readiness at SoftBank Investment Advisors. So thank you everyone for attending today. I'm confident this will be a very informative discussion that will give you a better understanding of making an exit by IPO. So I think first and foremost, Barrett, how are you?
I'm doing great, thanks.
Welcome, thank you so much. And we're really excited to hear your expertise. I think first and foremost, the most obvious question is, what is an IPO, or an initial public offering?
Yeah, that's a good question. I think most of us understand what an IPO is on the investor side, right? It's basically the first time you're able to buy stock in a company because it's now listed on an exchange. But there is the other side of it, right? Which is ultimately a company is selling a piece of its business to the public, to folks like you and me. And in this way, it's not, terribly dissimilar from a private capital raise where you actually sell a chunk of your company, but typically to a VC or private equity or something like that. But by and large, the process is not terribly different, where an investor says, I think the company is worth $1 million. I'll give you $100,000 for 10% of it, with the thinking that that's going to go up and so on, right? The big difference is when you do an IPO, it now allows normal people to invest, right? Normal people being non-VC in this particular discussion, to actually get a piece of the company. And why that changes things so much is that there's a general belief, and there's actually rules around this, that certain people should not be allowed to invest in certain companies unless they have a certain background, or unless they're privy to a certain amount of information, right? Yeah. So that background is typically financial related, and that's why you see VCs, private equity, and other investors are able to invest in private companies. But when you head towards the public markets where everybody can invest, there's a much more rigid set of rules that a company has to follow and go through, because the thinking is that people like you and me are not necessarily sophisticated investors. So we need a lot more information to be able to make wise decisions to be able to make these investments. Okay,
thank you so much. So I think, what are some of the benefits then? I mean, why do companies actually want to go public? What are some of the big benefits of going public?
Well, there's a big prestige component to it, right? A lot of people I met, this is just something that they've always wanted to do, that they believe that there's something special to having their companies listed on an exchange. But there's the more practical reasons. Probably the most practical reason is, one, you get a giant check at the end of it, right? You raise a ton of cash. I mean, it's sort of been lost recently, because a lot of people are talking about direct listings and SPACs and sort of changing up the process, right? But really the key component of an IPO is the capital raise, right? Is getting this big chunk of money. And you can always, especially nowadays, there's enough money in the private markets where you don't, your best companies are not having a hard time finding it. But when you get to the public markets, it's just a bit of a different story altogether. You also have liquidity. This is probably the next most important factor. So not just for the founders, but for employees, for investors, for everybody involved. You can now just take your stock to any exchange and actually sell it. Where when you own shares in a private company, it's considerably harder to actually get rid of those shares. So the liquidity discount's actually significant. And then you get a lot of publicity, right? There's an argument to say that during an IPO you will never be more high profile than when you're going through the IPO process. So, and then one more thing is you now have additional liquidity, not only the big check that you got, but because your shares are liquid and easily exchanged, you can actually use these as currency to go make additional acquisitions. So you're not limited to just the amount of money you have in the bank, but you actually have a much bigger purse sitting here that you're able to use. Now, the other side of the coin is that, in my opinion, being public is terrible, right? It's really it's considerably harder to run your company when it's public and you're at the scrutiny of everybody in the world, literally, to be able to see all your numbers and financials. It's a painful process. Not to mention, you have to get very good audits done, right? As a private company, you can kind of cut some corners here and there. But as a public company, going up to the SEC and telling them that these numbers are legit, they need to really be legit. And in order to do that, your audits are going to be considerably harder, take considerably more time. And it's just a ton of more work. That's just on the finance side. There's all sorts of regulations and rules as a public company that you have to jump through. So it's not something to take lightly, right? The good side of it is actually pretty exciting, but the bad side is tough. And if you're not ready for it, you can be punished severely by the public markets.
Wow. So really, it's like a higher level of scrutiny once you go public on every different level.
There is.
Yeah.
And there's such a greater level of accountability, when you're a public company. It's one thing to have, 5 VCs on your board calling you upset about something. It's an entirely different thing to literally have thousands of investors upset about something else, and having to deal with that. You can't just ignore your investors, right? This changes the game dramatically.
Yeah. So so tell us, I mean, as you know, when a company does an IPO, there's so much press and buzz around it. So just give us an example of a really successful IPO.
Well, I love this discussion because there's quite a debate around what actually defines a successful IPO.
Yeah.
I personally think, IPOs like Zoom and Beyond Meat last year that basically just took off after the IPO. I love those. I think that that's really cool. And kind of one of the main reasons you do IPOs is for that sort of excitement. Now, we all know Zoom now, thanks to COVID, and we're using it all the time. But before, it wasn't quite as popular. And so to get that bump that they got from their IPO, everybody in the world, everybody's talking about Zoom all the time, right? There's a value to that buzz. And it's really hard to put your finger on what that value is, but there's no doubt there's a value to that. And the reason I'm explaining that is because there's a lot of people that would define what Zoom and Beyond Meat did as the worst IPO ever. And it gets nuanced here, right? So let me get comfortable to explain this really quick. So if we remember, Beyond Meat and Zoom both just took off right after the IPOs. I mean, hockey stick straight up, and everybody was all over them and exciting. What some people complain about there is that they could have left a lot of money on the table. So take just Zoom as example, or any company as an example. When you do your IPO, you set an IPO price and say that price is $10 and you're selling 1 million shares. You're going to get $10 million, right? That's it. And so, sorry, hang on. I lost my train of thought. What were you talking? Oh, no. Sorry, were you going to say?
I was just asking, some examples of, successful IPOs.
I found it. Sorry. So Zoom, let's say they raise $10 at 1 million a share. They're going to raise $10 million. But if that price closes at $100 at the end of the day, then they, in theory, left $90 on the table. They could have sold those shares for $100 instead of $10. Now, this is in theory, right? And so people were screaming they left all of this money on the table that they could have raised, and eliminated that pop. So I get that. It's possible Zoom left hundreds of millions on the table if you look at it from that argument. But I think that also it completely discounts the buzz that I was mentioning before. And also things like company morale. How is the company feeling around the IPO? Because these are very, very real things that happen. I was at SuccessFactors back in 2007. I was their director of accounting and helped them through the IPO process. And when pricing didn't go that well, there was a real impact on the morale across the company. I mean, everybody felt it. Everybody was disappointed. People have been here for years waiting for this to basically help them get rich or buy a house or buy a car, whatever the case may be. Now, it ultimately turned around for SuccessFactors. Stock price went up. They had a nice acquisition and so on. But there are these other impacts that can change things. So again, back to your initial question before I started rambling, it got lost, right? But there are different ways to define a successful IPO. Flip that over real quick. Facebook, Google, these kind of companies, their IPOs traditionally are looked at as very poor. They did not go the way people expected, certainly with all the buzz around them. But fast forward 10 years, 20 years, whatever, those were clearly hugely successful public companies. So there's a debate whether you judge an IPO like in the first days or the first 10 years, and you're going to get very different answers.
Okay. So things can go wrong. I mean, we know that, and it's not a smooth and easy path. So I'm going to leave this as a very kind of general question. What are your thoughts on WeWork?
I've been thinking about this a lot. And I joined SoftBank, and was part of, I was around when WeWork was having its issues. And I'm not sure exactly what the answer is there, right? Like it probably boils down to Masa, who's the boss over at SoftBank. He's been highly successful, to say the least. And he is sort of famous for falling in love with companies and founders and really believing in them. And it has suited him well over the years. But, nobody's perfect. And sometimes you fall in love and maybe the other side wasn't quite what you thought it was. So, and maybe that's more making it more complicated than it really is. Maybe they just sort of got out ahead of their skis a little bit. Okay. And so I think it's an interesting business and an interesting business model. And I wouldn't be surprised if it does ultimately end up being successful, but that certainly was a challenging time for them.
Okay, so I've just got a question here, and actually that was on my list, but since an attendee has actually asked that, can you talk a little bit about the rise of SPACs this year?
Sure.
Because we know it's been really, really hot this year.
Yep. So, SPACs being special purpose acquisition companies, basically another name for them is these blank check companies. And ultimately, it's just a company that goes public with nothing but cash. So there's no operations, there's no anything. And the company is now out there hunting for targets, hunting for a right private company in its particular space. And SPACs were traditionally in areas like real estate or energy. And it wasn't until recently that we really started to see a lot of them jump into tech. And what I love about this is, SPACs, the way I think about SPACs is put all of your startups into sort of one population of private companies. There's, a few different ways to go public: IPO, direct listing, SPAC, reverse merger, whatever else. But let's say your superstar companies, your top 10% out of that entire bucket, they're typically your IPO companies. And more than not, if you can do an IPO, you do an IPO. It's still the path for the most prestigious, the sexiest of companies, right? Yeah. Not always. We're starting to see some SPACs get big enough to talk some of these other companies out of it, but usually that's where they want to go. What I love about SPACs is it's really broadened that population of companies that can realistically get public. Because let's say you're in that 70% range, a nice company, and maybe you're cash flow positive, maybe your growth isn't there or something like that. Those will have a really hard time doing an IPO. But SPACs, that's sort of the SPAC sweet spot. And ultimately, you could say it's kind of like a search for a diamond in the rough, because you see that company, maybe the growth's not there, but you believe you can go in and tweak a few things and get that growth. Yeah. Right. And that's going to be the key to it. So I would say that the SPACs have broadened that population to that 70 to 90% bucket, has a really realistic and not terribly challenging path to be able to get to the public markets. There's going to be some ugliness that comes out of this, because a lot of those companies in that 70, 90 range don't belong being public. They just don't, they're not ready for it, or it's not really a diamond in the rough. It's a turd in the rough, right? So you can't always quite tell. And so we're going to have probably some really ugly ones come out of this, but I bet there'll be some really nice ones too. So I like the SPAC thing. I think it's really neat. I'm all for more options for private companies to be able to do whatever it is that they want to do. And if they're dying to go public, but they don't necessarily have the story for the IPO, the SPAC is brilliant.
So just again, I just want to make sure attendees get their questions answered as well. Some questions here. Any thoughts on direct listings, for example, Spotify? And another question, I just throw it into from the same person. Any thoughts on long-term stock exchange?
Yeah. No. So I think direct listings are great, if for nothing else, that optionality that I was just talking about. But they still confuse me a little bit, because it's basically an IPO just without the big check, right? And the big check to me is great, right? I want a big check. I mean, I have a hard time envisioning any argument that says, no, I don't want to take more money, right? And that's not to say I don't understand dilution. I absolutely do. Yeah. But to me, cash is king, always has been, always will be. And the more you have, the better, because you don't know what's going to happen a year from now, right? We didn't know COVID was happening. We don't know what's going to happen next year and so on. And to have that bankroll, I think it's, I don't know, it feels like an unforced error. Now, there are situations where it can make sense. If you literally just have so much money you don't know what to do with, I get it, right? Go ahead. And if you're a hot company that everybody's talking about already, because maybe this is another piece of it, with direct listings, you lose some of the pitch, right? The bankers that are actually pushing your IPO forward, and because they're trying to make money off of it. You lose some of this in the direct listing process. So it's not perfect, but for certain companies, I get it, and I'm all for it. Now, in terms of the work that has to be done for all three of these SPACs, direct listings and IPOs, it's the same, right? So on the operating side, on the company side, you still have to do all of the same amount of work for all of these. And the only real difference is probably timing, right? Direct listings and IPOs, they're pretty frantic, and you have a fairly brief amount of time. But with a SPAC, it's like light speed. And you have to move super fast and move mountains to get these companies where they need to be. There's a massive discrepancy between your typical private company and public companies, and all that they have to go through. Right?
And what about the long-term stock exchange?
Yeah.
Any thoughts on that? Just a quick.
Yep. No, I think it's great. Again, more optionality. It's an interesting concept. You know, you do hear a lot of people complain about being public and the short-termism of it, right? Having to constantly, every quarter is sort of do or die, and you have to have, these great numbers, and it can cause just volatility that probably drives people crazy. And the long-term stock exchange, part of the gist of it is to be able to get away from that and allow companies to do what they want to do to be able to grow, instead of just hyper-focused on the next 90 days.
Okay, so I always like to tell people that there are different ways, or different entrepreneurs have different aspirations where they want their companies to go. So we do have high growth companies that have actually opted to stay private, like Melton.
Yeah.
Why would a company as big as Melton, but there are obviously other examples, I mentioned Melton because based in Atlanta, why would they actually opt to stay private and not take this IPO opportunity?
Because it's so much easier. Like I just can't express enough. Like the difference between running a private company and running a public company are just night and day. And so look, I'm gonna talk out of both sides of my mouth here for a little bit, right? And explain. If I'm running a public company, if I'm a CEO of a startup, I want to stay private as long as I can. Right. And, if I don't have some real serious financial reason to go forward with an IPO, it's just so much easier to run the company. Things like competitive disadvantage. You don't have to, when you're a public company, you have to disclose all kinds of stuff that, may be secretive a little bit. Not all your secrets, but certainly a lot of them. And nobody wants to do that. And you could put yourself at a competitive disadvantage. So as a CEO, and it's super expensive being public. So as a CEO, I'm going to want to hold off as long as I can. Now, on the other side, as an investor, as a person, I think that there's a bit of a fiduciary duty for companies when they get to a certain size to go public. Us as investors or employees, they deserve to know a little bit about the company that they're actually working for and could potentially have a huge financial stake in as it goes forward. I tend to feel better. I think there's just so much more accountability for companies when they're public that for me, I'd love to see all companies go public. So that's what I mean by both sides, right? I get it. I don't want to do it, but I see the reasoning behind it.
Okay, so it's a much higher level of transparency when you're public because everything, all your data's out there for scrutiny.
Yeah, it's terrible. And one of the things when we go through IPOs is founders and CEOs get very frustrated when they find out that all the stuff that we do have to disclose. And you have to provide like significant agreements, full detail, maybe some of it retracted, but you really are opening up the Komodo for the whole world to see, and it can be quite uncomfortable for a lot of people.
Yeah. So hopefully we have some attendees here that are at the helm of a VC company that are thinking of going public. Are there any particular requirements, like do you need to have a certain amount of revenue? I mean, what are there? I mean, obviously not everyone can go public. So what are the requirements?
Well, there aren't like metrics like that, like revenue. There are sort of rules of thumb, and they're constantly changing. For the longest time, it was you wanted to have around $100 million of revenue. But, we see companies go earlier, certainly in the SPAC space. And I would say that number's grown to your sort of higher, more sexy IPOs, to where you really want to see, almost at least nearing that $1 billion valuation, and maybe having a couple $100 million and stuff like that. So those are rules of thumbs where you'd like to see. But in terms of the real rules that you have to follow, probably the biggest one, the one that takes the longest for companies to clean up, is their audits. And I touched on this before. The financial statement audits are, as a private company, are so just half-ass. Right. And part of the reason is because they're done for like 10 grand, or 40 grand, or when the reality is they're costing the firms, 100 grand to do it. They're literally losing money to do this. So it's not going to be the best IPO. I mean, the best audit ever. And it doesn't need to be. But once you start to head down the IPO path, your audit team is going to triple in size. They're going to start asking for memos for everything you've ever done. And it's going to be considerably more painful and take a lot of time. So I would say getting your audits in order, making sure you have a good audit team that actually knows what they're doing, that's been through an IPO before. This is probably the thing that would help speed up an IPO more than everything else. You also have your S1s and your filings that you have to do, and you have all sorts of all the exchanges. They have their own rules. They're usually not too restrictive. But there's a reason that you have like 30 lawyers helping you through the IPO process, right? Because there is so much of this stuff that has to be done.
Yeah. So what can companies do to prepare then? Let's talk about IPO readiness. Also, talk to us actually about some of the steps that companies need to take to actually get to that, that IPO stage.
Yep. Yeah. So look, the first thing is hire good lawyers, right? And this is coming from an accountant. Right. I'd love to say hire a good accountant, and that's next. But first and foremost, the key to a smooth IPO is attorneys. The key to a fast IPO is the accountants. Right. So for me, if I'm running a company, I hire the best attorney I can find. And again, when it comes to attorneys and accountants, the firm is way less important. It's the partner, right? The partner at that firm is the key. Because all the firms are going to tell you they're great at, IPOs, and they do them all the time, and they do, right? But really, it's about the partners. Getting a partner that does these all day, every day is going to be huge. Second, hire a really good audit team that knows what they're doing, that they've been here before, and then the pieces will start to fall in place. But on every IPO ever, it's the finances and accounting that slow things down. Always, 100%. All the legal stuff, all the other stuff can be done in a matter of months. Often the finance and accounting takes up to a year. So get that in order sooner rather than later if possible. And again, that's challenging. I understand the when you're running a startup, accounting is probably the last thing that you want to deal with. It literally only, it's a money outflow. When really you're trying to figure out how to pay the bills, how to pay your people, and really important things like that. So if that's where you're at, those are clearly the more important things. But if you're really in the growth phase and really starting to think about an IPO in a couple of years, it's time to really start to get your finances in order.
Okay, a couple of attendees are highlighting diversity. Black Latinx founders. So obviously these are huge companies. So one of the questions here is there a resource that tracks public companies with diverse founders? Is there any?
I'm sorry, I had a hard time hearing. You said, are there lots of IPOs with diverse founders?
Yeah, or is there? Is there a resource that tracks companies that with diverse founders, or how many diverse founders are at the helm of public companies?
No, there should be. I mean, look, anecdotally, I can only think of very few, right? It's highly white dudes, right? Yeah. And it's something that needs to be done around that. And look, I would say, I've been here in the Bay Area for 13 years doing this. And the talk around diversity has really ramped up a lot in the last, let's say, year and a half, 2 years, to where people are focusing on this. And I do expect to see a lot more diversity in this going forward, because we're seeing this in the lower ranks. It's not near where it needs to be. But I'm hopeful, and I believe that discussion is taking place right now. So, fingers crossed that we see more of this in the future.
Because there are a number of steps to get to the IPO level, isn't there? There's raising a Series A, Series C. Yep. So I think one of the issues is that diverse founders don't even get to those steps to raising those huge to raising those huge capital raises. So that probably is what slows it down. Another question here is, do you have any practical advice for lawyers on how they can be a valuable partner in the process?
Well, that's a good question. It's really, I would say, just being responsive. I hear the frustrations I hear are that, these people won't get back to me. They're too busy. They've got these other clients that they're dealing with. And I understand that side of it too. Sometimes you get in that spot and it really is hard to reply. And sometimes you tend to reply, last to the people that probably need it the most. It's just trying to, be a good client service provider. And I'd say, being the lawyer is probably no different than the accountant. I'm not sure in terms of technical skills. With an IPO, they're not terribly technical. It's just they're unique, So it's really it's not that hard. And there's a running joke around the Bay Area: if you do 2 IPOs, you're an expert, because it really isn't that hard. It's just something people don't do a lot of. So maybe experience is the answer. Just getting on a couple.
Okay. And another question here is: can you provide a bit more? And you may have mentioned this anyway, but she's obviously asked for more clarification. Can you provide a bit more detail on why it takes a year to prepare the accounting and finance?
Yeah, because there are not software tools that exist that help companies grow from $1 million to $100 million, right? We're seeing companies do this on Excel. I worked with a company a couple of years ago that was running their customer list on 5 maxed out Excel spreadsheets that each one took 10 minutes to open, right? You can't run a company like that. And so because companies that explode from 1 million to 100 million, only happens a handful of times a year, right? Nobody's going to dedicate that much time to build a software that is specifically to that. So that sort of growth blows up everything. And so as an auditor, you're literally going in there and putting your name on the line, well, your firm's name, but it's you on the line. And these numbers are right. You're not gonna put up with spreadsheets that take 10 minutes to open and could be, filled with just all sorts of input errors and things like that. So it's really more of a process of like getting off QuickBooks in the NetSuite, or getting a billing system and doing these other things until your numbers are even reliable enough to even be able to give to the auditors. So it's really the cleanup process. It's not the audit.
Okay. So this is more, I suppose, more of a general question. Obviously, when I'm in unprecedented times, we've had COVID, we've had the shift to remote work. Are there certain companies, and I'm obviously particularly talking about high growth companies, that have actually benefited from this environment?
Yeah, sure. I mean, Zoom and Peloton are sort of the ones that jump out at me that clearly, were primed for this. I mean, just the perfect tools for this. But now, with the news of the potential vaccine that came out the other day, we're seeing this course correction just massively that I would say sort of is just the most perfect gift for a company like Airbnb, right?
Yeah.
Who really COVID, and I know nothing about Airbnb, right? Just everything everybody else reads, but COVID probably hurt them a lot, right? But then to hear that there's a potential vaccine, and their IPO is being rumored to be any time now. I mean, my goodness, right? Timing's everything, and in life, but especially when it comes to IPOs.
Yeah, and actually talking about external factors, and obviously we just had a very contentious election. Again, has the political landscape? Is there any impact on IPO? Yeah. What's happening?
Yeah, clearly. I mean, I think there was a big push for companies to try and get out before the IPO, before the election, just because there was uncertainty around it. And traditionally, the enemy of the IPO is uncertainty and volatility. And so clearly that looked like it was going to be the case last week, and it ended up being, right? So you did see this push. Now, I think companies are in the wait and see mode to see what happens. But it would seem on the surface that this election was maybe the best thing that could have happened for the stock market. I mean, it really seems to like a divided government. And so, I'm assuming this IPO parade is just beginning. I mean, there are still so many unicorns, decacorns, whatever you want to call them, like in the pipeline that, if the markets continue to hold up, we're just going to see this never ending parade of IPOs for, I would say, for the next several years. Right now, the market will dictate if that actually holds true. Of course, if we have just some implosion, companies are going to hold back. But the way things look now, pipeline combined to friendly market conditions at the moment, it should just be gangbusters.
Okay. And I just want to, there are several questions coming in, but I just want to ask one here. Compensation for employees who are relocating to Silicon Valley due to COVID is going down substantially. Is the equity part of the compensation equation also going down?
Not that I've seen. And I'm not convinced that there is this massive exodus from the Bay Area. It feels like, every other year there's some big story in the New York Times or something about how there's a new Silicon Valley here or there. And it never seems to hold true. I mean, still today, at this day and age, the bulk of the money is in the Bay Area. And, this is where your biggest tech companies are. Not all of them, of course, but a lot of them. I don't see that model changing anytime soon. That's how the Bay Area works. I mean, nobody can buy a house in the Bay Area with their salary. Right? It's all stock options. This is a stock option society, and with the housing prices the way they are, I don't see that changing anytime soon.
Okay, so let's think about the next few months or 2021. Are there any upcoming IPOs that we should be watching?
Yeah, no, Airbnb is the one everybody's talking about, and me too. It feels like everybody in the IPO world has been waiting for this forever. I want to say, I remember I want to say 2014, maybe 2015, but all the companies Fast and TechCrunch and everybody else comes out with their list of the hottest IPOs in the upcoming year, and everybody had Airbnb in 2015, right? And we're here in 2020, and it feels like it's finally going to happen. So just as an IPO nerd, I'm super excited to see that. I'm super excited to see what their numbers actually look like. And I would imagine that the IPO will be huge. Everybody will be talking about it. It will be super exciting. It will be like Uber a couple of years ago, except probably maybe even more exciting. It's awesome. I can't wait. But then, I mean, there's a lot right here. Where's my list? I know Postmates and DoorDash are the other big ones that people are excited about. That these could be coming anytime soon. For me personally, I love Roblox. I have little kids. Roblox, I think, is one of the most amazing companies and technologies that I've ever seen. They're being rumored to be going at some point as well. Companies like Robinhood and Coinbase, really exciting in the fintech space, and they're being rumored as well. I mean, all of these, House, Data, these are really exciting companies that all could get out either this year or in 2021, and that's quite a crop.
Okay. So this leads very nicely into the next question, actually. So obviously, what advice would you give individuals, or maybe I would say maybe inexperienced investors, on actually buying stock or share at the company's initial public offering?
Yeah, sure. Now, I'm not a stockbroker. This is not stock advice, right? But me personally, I would never invest in a company before the lockup, right? And the lockup is, usually companies that go through an IPO have a lockup, which requires their employees and most of their investors and founders to actually hold the shares for 6 months before they can sell it. And during that 6-month time, you often have what's called a pretty small float. So let's say in the IPO, you don't sell 100% of the company. You usually only sell 10%, 15%, maybe 20%, right? So it's just this little piece of the company that you could argue doesn't give you the true fair value of the company. But once the lockup expires, then all the shares are available. Founders can start selling, employees can start selling. You get a real two-sided market. And in my opinion, that's where the value, the true fair value really starts to take shape. So you can do it before, of course, and it's always a gamble even after the lockup, but it just feels like a considerably greater gamble before the lockup.
So when you say the lockup, are you saying wait 6 months? I mean, I know you're not giving advice, but for yourself personally, are you saying 6 months after the company's gone public, or just wait some time?
Waiting until the lockup. So the lockup it's a defined term within the IPO. It can be 90 days, it can be 6 months, but whatever that day, literally that day, right? The day that's all these employees that have been at the company for 5 years waiting to buy the house can finally sell their shares, right? And so you often see a big dump of shares at that particular time.
Okay. Let's see, we may have time for one quick question before we really round up. We're going to have to answer it very quickly. Have you looked at overseas exchanges such as the London Stock Exchange? Yeah,
London Stock Exchange is excellent. So is the ASX in Australia. I mean, there are other good exchanges around the world, no doubt. That that might be better suited for a lot of the companies here in the States even. They've got a little friendlier process in many ways. That does make it easier for smaller companies. Now, there's no doubt that the U.S. markets are bigger than all the rest of the world's markets combined, right? Yeah. So this is why the bulk of people today, are coming here. But absolutely, those exchanges are excellent exchanges and a great place to list a company.
Okay, wonderful. Okay, thank you so much.
Yeah, thanks. It was great.
Expertise, and I'm hoping that this has been very, informative for anyone who's thinking about doing an IPO, or even someone thinking about actually investing in a public company. So really appreciate your time. Thank you to our audience for your amazing questions as well. Really enjoyed those as well. So hope to the audience, hope you will enjoy the rest of the day. Thank you.
Thank you.